If you're looking for an awesome product at a great price, be sure to check out the link in the description. Panama's Comptroller General has initiated legal action against the owner of two crucial ports, sparking a significant development in the ongoing geopolitical maneuvering between the United States and China. Two cases have been filed with the country's Supreme Court targeting the Panama Ports Company, a move that is widely perceived as a strategic win for those seeking to diminish Chinese influence over the Panama Canal. This legal intervention follows a failed attempt to transfer ownership of these strategically vital ports to a consortium led by the American investment giant BlackRock and the Swiss shipping firm MSC. The ports, located at either end of the iconic Panama Canal, were originally awarded to the Hong Kong-based firm CK Hutchison back in 1997. The situation intensified significantly on January 20, when the matter became a focal point as part of the former U.S. president's inaugural speech, where he vowed to reclaim the canal from purported Chinese influence. The very same day, Comptroller General Anil Flores publicly announced the commencement of an audit targeting the Panama Ports Company, the port's owner. In March, BlackRock, one of the world's largest asset management companies, revealed its partnership with MSC to acquire Panama Ports Company, along with 41 other ports within CK Hutchison's global portfolio. The deadline for finalizing the details of this acquisition was set for July 27. The proposed sale of these strategic assets did not sit well with authorities in Beijing. On March 28, China's antitrust regulator announced a review of the deal, citing its commitment to safeguarding fair market competition and public interest. Further complicating matters, a report by the Wall Street Journal earlier this month indicated that the Chinese government had expressed concerns about the deal, purportedly threatening to block it unless COSCO, a prominent local shipping conglomerate, was integrated into the takeover consortium as a veto-holding member. On Wednesday, Comptroller General Flores stated that the Panama Ports' existing contract was both unfair and abusive. He cited the company's alleged failure to remit sufficient royalties to the Panamanian government and criticized the 25-year contract extension, signed in 2023, claiming it lacked the necessary authorization. One lawsuit filed with the Supreme Court seeks to invalidate the current contract, while the other aims to declare it unconstitutional. Responding to speculation surrounding COSCO's potential involvement in the deal, Flores expressed his disapproval of people negotiating the future of assets that belong to us, the Panamanians. Panamanian President José Raúl Mulino expressed his support for Flores' decision on Thursday, while stating that the decision was unrelated to the ongoing struggle over the port's ownership. The timing of the announcement is particularly advantageous for the U.S.-backed consortium. If the court cases are successful, it could force the retendering of contracts for port operations. Given Panama's withdrawal from China's Belt and Road Initiative in April, a successful bid from a U.S. firm or an ally is considered likely. Annulment of the Panama Ports Company contract and the subsequent retendering of the port operations could provide Panama with an opportunity to renegotiate contract terms that would be more beneficial to the state. Conversely, the nation could also be exposed to potential litigation from CK Hutchison, which could argue that the government's actions amount